Thank you. Mr. Liddy, mark-to-market I think is good in concept, but insurance and banking CEOs are telling me that it is not working well in a distressed market. I'd like your comments on modifications I and others have proposed, or general modification, and how it might help AIG to increase the likelihood of the taxpayers being fully reimbursed.
Yes, sir. I think mark-to-market is a good concept to run amok. On balance, knowing what something is worth every day is a good thing, but it presumes that there's a market. It presumes that there's a willing buyer and a willing seller. When liquidity completely dries up, there's not a willing buyer. So you have to keep marking the value of the assets down to an unwilling buyer level. In insurance companies, we have a long liability. We will insure your life, and we will match it with a long-dated asset. Those long-dated assets, like commercial mortgage-backed securities and residential mortgage-backed securities, because they're long-dated, they are not liquid right now, and they have been buffeted in value, unlike anything most of us have ever seen. So as a result of that, AIG and many other insurance companies have had to write the value of those assets down, and it's caused great stress on the liquidity. So I'm a believer in mark-to-market, but I think it's not a one-size-fits-all, and I think it's not a one-size-fits-all with respect to all the various assets to which it applies. I think it is important that some adjustment be made. To be honest with you, much of the damage is already done, but that's not an argument for not closing the door. We should still close the door and perhaps be more prudent about how we apply it, starting with this quarter, the first quarter of 2009, going forward.
And maybe be critical to get that guidance out before those first quarter reports.
Yes, I know this topic has been discussed before, and it made sense to me to not do anything in 2008. You kind of can't do it in the fourth quarter of the year. But to start afresh with the new quarter of 2009, to the extent it's possible, that makes sense to me.
Thanks. You said that you've unwound all but about $10,000 worth of credit default swaps. That's very good news. That's $70 billion. What about the balance sheet rental? When you were talking about regulatory capital, was that the same thing or a different thing?
No, that is the balance sheet rental. The regulatory capital trades are really of a substantially different nature. They don't require, for the most part, they don't require the collateral postings that the credit default swaps did. It's pay as you go. If a company actually doesn't get a payment, then you have to make them whole. What's happened, and the couple of individuals on the previous panel did a great job, I thought, of explaining that. With the AIG credit default swaps, what we did was we insured the value. So when the value went down, we had to post collateral. In most cases, what you're doing is you're insuring the payment. So the regulatory capital works in an entirely different way.
Sure. What on the balance sheet rental, have you had progress in that regard?
Yes, that number was at its height. I'm going to give you boxcar numbers. I don't remember it precisely. Was 350 or $370 billion. It is now down to $230 billion. And because of some things that are happening in the regulatory environment in Europe, that will be reduced by 95% by the end of the first quarter next year.
All right. I mean, I've had some problems. We use that figure, $170 billion, bailout money that the taxpayers are owed.
Yes.
Now, I'm aware of the federal loan, which is $37.8 billion, the $40 billion TARP.
Mm-hmm.
Now, that's $77 billion, $78 billion. Is that what is actually owed, or is it $170 billion?
No, it's $78 billion that is actually owed. Let me, if you would, let me break down the pieces. $40 billion of TARP money. You're 100% correct. $37.8 billion at the end of 2008. It might have gone up a skosh. So it's in a range of $80 billion is what we actually owe.
All right.
Now, the Federal Reserve invested in some of our distressed assets. They bought into financing vehicles that have RMBSs in them.
Those are the Maiden Lane?
Yes, Maiden Lane 2 and 3. They were able to acquire those assets at a discount at 40 or 50 or 60 cents on the dollar. They are currently performing. There's been no credit losses on them. And they are a patient investor. They and the American public will do very well on that investment. So I believe what frequently happens is people take the 40 and they take we can have as much as $60 billion from the Federal Reserve. We've only tapped into, let's call it 40, but analysts, writers will take 40 plus 60 plus the $50 billion of assets that the Federal Reserve has invested in, and a few other things, and they get to that $170 billion number. It's an important distinction because for us to pay off what we owe the federal government, it's roughly an $80 billion target right now, and we can do that, but we need some help from the markets to be able to do it.
Thank you. Let me say this, Mr. Chairman, as I close. It's my understanding most of those assets, they were, like you say, they were 45 cents, 50 cents on the dollar. Now, in the markets, generally, they're trading about 90 cents on the dollar. Is that...
No, that's too high. That's too high, sir. That's too high. They are down, depends upon the specific asset, but they're probably anywhere from 30 to 75 cents. It depends upon the asset. But the really important thing is they are current pay. You know, for every dollar that's owed on those, 96 or 97 or 98 cents is being paid.
But that's performing.
Yes,
so they're
performing.
Okay.
They are performing.
And, you know, when you talk about $1.6 trillion under management and you having to have people to manage that, I'd say to the committee, we're talking about this is a big number, but 1,600,000 million.
Right.
That's a pretty big figure.
And sir, that really is the risk trade-off that we made. I don't want that book to blow up and cause to come undone all that we've achieved, all that you all have achieved thus far. You know, do other reasonable people see it in an entirely different way? Yes. Okay. Is the American public mad as a hornet about it? Yes. Would I have liked not to have made those payments? Yes. But I don't want that business to erupt on us and cause the difficulties we've tried so hard to avoid.
I think that is the definition of the risk, if those aren't properly managed, is 1,600,000 million. So we ought to all keep that in mind when we talk about you having the skill to manage those. Thank you.
Thank you, sir.